We ask them relevant questions and we come up with some real insights. We are live and interactive, and our hashtag is The Point of View. We're also on Facebook at CityTVGH. Tonight we have a big conversation. Ghana's economy is going through interesting times, and the financial sector is in trouble. In August 2017, 2 banks went under. They were received and merged into GCB. Exactly a year after, 5 more banks went under the sink. So we have 7 banks in 2 years struggling. Many of the financial institutions say there appears to be a run on them as customers are demanding deposits. This week, City News visited certain parts of the country to speak to customers, and you'll find a very disturbing trend. When we come back, I will show you who I have in studio and what they'll be telling us about our economy, especially our financial sector. So if you are watching and you've been affected by the sector challenges, we'll be very happy for you to comment on the WhatsApp number we'll put on the screen. If you're watching on Facebook as well, there's a conversation underneath the stream that you can contribute to and comment on. Before I introduce who my guests are to you, I'm going to take you first to Kumasi, because yesterday some customers of First Allied Financial Services protested to the Otumfo to intervene because their monies had been locked up in the institution. Take a look.
While some of the customers are calling on the Bank of Ghana to investigate the financial institution over its inability to pay customers for several months, others threatening legal action against the institution. Kwakye Echampong, who speaks for the aggrieved customers, addressed journalists in Kumasi.
To the bank for over 2 to 3 months in view of getting our money, not even the money, but some money so we could run our businesses and take care of our kids. But immediately you go there, they will tell you there is no money for you. Wait for end of the month. We have been going there several times, and end of the month is within 30 days. But it looks like we've been going there for over 60 to 90 days. So which kind of end of the month that they want to tell us, they have to let us know. Secondly, our money are there for safekeeping. So we have to get our money anytime we go to the bank and you need part of your money or even all the money, it has to be appreciated and given to you. But we don't get anything, even a penny, we don't get it. Me standing here for a week ago, all my money got finished. Now I have to lend money from other people to eat, which is very bad. So if we don't hear from them within a week, illegal action and Nanado attention will be considered.
So those were customers of First Allied from Kumasi, the customers in Kumasi expressing their dissatisfaction with the fact that they couldn't access their monies. This was yesterday. Of course, today as well, we've had issues. Customers of Gold Coast Company have been complaining to City News about their inability to access their funds. Here's a quick report.
The customers say several attempts to retrieve their money has been unsuccessful, hence their agitation. Some of them who spoke to City Business News also expressed displeasure at the delay in retrieving their money and have threatened to sue the company should they not get their money soon.
I have been coming here for the last 3 weeks. It's been one story to the other, and I'm here, and the manager just looked at me in the face and told me that there is no money. So if I decide to sit there till they close, well, whatever, there's no money. If they can't give me the interest, I don't have a problem. Let's just give me back my principal as I brought.
General Manager in charge of Investor Relations and Marketing at the Gold Coast, Benjamin Afre, however, describes the development as a panic withdrawal, which has stemmed from the current happenings in the financial sector. He, however, assures customers their monies will be paid to them by the end of next week.
The issue, and I think we've spoken about this for almost 2 weeks now, we've had a situation where there's been some panic in the system. As a result of that, you have so many clients coming at the same time to put in a request. Of course, there are anticipation of those things, so we always make preparations and provisions for that. but where you have an excessive flow of clients coming all at the same time, mainly also because of some of the issues happening within the industry, then it makes it a bit difficult to meet the payment requests as we had already scheduled with them. But in the midst of that, we are still making payments. What we are doing is to be able to schedule it such that we're able to calmly deal with everybody who comes. Well, what we are doing is, because of the backlog that we had as a result of everybody rushing, we've had to take our time to make sure we pay everybody. And so we've had a delay of about 2 weeks, 3 weeks. But if it's gone beyond 3 weeks, I'm sure within this week, unless we could be able to take care of that as well.
But General Manager of Gold Coast Trustees, Victoria Agligbo Ama, says although the company is facing minor challenges, customers' investments are safe, while adding that the company will bounce back to normalcy soon.
In the industry itself, and the first time of its kind in our existence. And so yes, there may be some baby steps for us also that we are taking, but we are dealing with this head on. And I mean, if we hadn't paid all of the people whom we were supposed to have paid from last month, for instance, I mean, you would have probably been hearing a different story by now, you know. So we are working through this turbulence, but we are still meeting the obligations that we have to meet. And so we appeal to our customers that they should work with us, they should bear with us. This is really what is called partnership. You know, this is what we have faced over the past few weeks. They should work with us as we fulfill our part of the promise to them, and they should be assured that they remain safe with us, because we have accounted for everything that they have with us, and everybody will be taken care of. We also do have an integrity to protect as a firm, having survived in this industry for 25 years. And so when we, while we want to preserve their investment with us, we also want to preserve our own integrity as a firm as well.
So that was a report, Jessica Kwakye put together today. So how serious is the challenge our financial institutions are facing? What's the relationship between what's happening within our banking and non-banking sector in finance and the overall economy? I have two of the best minds to discuss this. Start next to me is a senior economist. He's worked with IFS, IEA, and the IMF. He has taught extensively and researched in monetary, fiscal, and exchange rate policy, inflation, cost of credit, foreign aid, debt sustainability, everything. It's one of my favorite economists, Dr. John Kwakye, is here to talk to us. Doc, great to have you. Good evening.
Yeah.
We also have Dr. Sam Mensah, financial economist and investment banking consultant. He's done all kinds of things. He's advised various governments, not just in Ghana, but in Canada as well. He's also taught in finance. He has a PhD in finance, master's in economics, and one of our best financial economists in this part of the world, Dr. Sam Mensah. Great to have you.
Thank you.
Great. So I want you to explain what is going on to my viewers. You know, because this morning on my radio show, people called and complained about many savings and loans companies. Names I can't even mention. What is happening?
Yeah. In fact, we've heard a lot about what has been going on, and it looks like the situation is, you know, getting out of
snowballing.
It's snowballing, and that's also part of the problem, because it looks like there's the issue of panic. You know, there's panic, some kind of panic that is setting in, and therefore people are speculating. And therefore, it's like everybody is asking themselves, are my savings safe with the banks? You know, because of what is going on in the system as a whole. And it's like everybody is saying, let me go withdraw my savings because maybe it's not safe because of what I've seen with happening with another bank. So it's this kind of snowballing that's taking place. But I think that fundamentally, some of the institutions are also having problems. And of course, if you are a bank and you know you take deposits from the public and then you lend part of it. So what you keep in reserve for every customer is really very small. So if at any time you have a lot of customers coming back and demanding their deposits, you are certainly going to be in trouble, because investments that you have made may not be so liquid as to enable you to turn them around quickly into cash, because maybe long-term investments. So you will certainly find yourself in serious difficulty in meeting those demands. And that is why some banks will go and fall on the central bank for some kind of liquidity support. So it looks like, well, first, some of the banks maybe have had their capital eroded over the years, you know, and then weaknesses with credit management have also contributed, you know, to the problem. And then some are also offering, especially the small, you know, financial institutions, interest rates, returns on deposits that when you hear it, you realize that they are not really, they cannot be sustained.
Okay.
So when all these factors, you know, come together, then it means that we are in some kind of trouble.
Dr. Mensah, how did we get here?
Well, you know, it's complicated. We've had 7 banks basically go out of business. The central bank and the government have tried to do a bailout of sorts by promising to, you know, promising depositors that they'll get their funds. But the process has not really run very smoothly because a lot of institutions also have deposits with these 7 banks. And the process of recovering their deposits is very slow. I don't think Consolidated Bank is not processing these deposits very quickly enough. And so there is deposits from various financial institutions with these institutions.
7 that went down.
The 7 that went down. So those are the second round effects of the bank resolution, which we have not really resolved. And the second round effects are now starting to play out.
Oh, so this is just the start of the second round?
Well,
how many rounds are there?
No, there's a ripple.
Wow.
Yeah. It's a ripple. And then, so that's one. And then the second problem is that there's a confidence in the system is shaken. I think if you read the Bank of Ghana report, a press release from the recent MPC, there was a line in there that said the business confidence has gone down because of the, they didn't really give reasons, but in the consumer and business survey, it's down. So confidence is down. And I think Dr. Kwakye mentioned the fact that it is not that easy for a financial institution to convert its assets into very liquid form in a short space of time. So all these things are going on. I think we need to give the public some more assurances somehow that, you know, their deposits are reasonably safe. But at this moment, I think that confidence is really low.
If you look at the size of the 7 banks that collapsed, will this second round effects be much bigger? I.e., is this going to get worse before it gets better?
Well, I mean, the problems are deep. It will certainly help if these 7 banks are, the liabilities of these 7 banks are settled as quickly as possible, but will not quite solve the problem. Because some of these savings and loans, etc., have their own credit management problems already. Okay, so resolving those 7 banks I think will help. It will help build up a little bit more confidence, but it will not quite resolve the problem because of mismanagement and, you know, poor credit management of many of these institutions.
So there are layers and layers of problems.
Yeah. Second and third round effect.
Second and third round, you think so too? So there's going to be a bit more ripple effect before it normalizes?
Well, I don't hope that happens. We are all hoping that there wouldn't be these second round and third round effects. But sometimes when these things start, you never know exactly where it will end up. But I must say that, you know, when the government and the central bank guaranteed that they will safeguard, I mean,
depositors' funds,
I think that was a very good, you know, move. You know, at least that put some confidence in the system. And that actually prevented some of these panic withdrawals. We haven't seen that much, at least within the former banks, the banking system.
Yes.
Because of this assurance that was given that we'll pay you all your deposits. But of course, that has come at a great cost to the nation in bailing out, these banks. So we're hoping that this panic withdrawals will be limited, will be contained within the non-bank financial institutions, rather than spreading to the rest of the banking sector. So
if people, you're saying that the way the banking system works, if everybody wants to take their money from even the biggest bank, they will not survive.
That will be
very difficult.
Very difficult. It's like a run on banks, and
despite the reserve requirement and all the things they put together, if all the people wanted their money tomorrow morning, no bank will survive.
It won't work. No. Because you have to convert those assets. And what are the biggest assets of a bank? The biggest assets are loans and advances. And so you've written loans and advances contracts with borrowers, and somebody has 5 years to pay, 3 years to pay, 1 year to pay. So in a panic, how do you get that money?
Wow.
And the reserve requirement that you mentioned, it's only 10%. In other words, when banks collect 100,
they keep 10.
They should lodge it to Bank of Ghana, 10. So it's a kind of insurance.
And work with the 90.
And work with the 90. But, in other countries, that's why they have what they call deposit insurance, scheme. Yeah. It's created by the governments. And then maybe the banks will fund it, so that you keep it in case there is you run into this kind of difficulty. Then you use it to fund deposits.
Should banks not increase the reserve requirement then?
That's up to Bank of Ghana.
But we can all see that the money they have is not enough. That's why there's a problem. Why should we all?
But in the normal circumstances, it is enough. It's only in a crisis situation where the 9% reserve becomes too limiting. But in a normal banking situation, we don't have a problem.
Yeah.
Okay, let's go back. How did we have 7 banks collapse? Is it just 7 bad behaved banks, or was it a consequence of structural problems with our banking sector which we did not resolve, which is now caught up with us? Let me start with some, because I know you've written a lot about our banking sector after liberalization. Is it just 7 bad boys misbehaving, or was this a consequence of years of inefficiency, profiteering, poor regulation, which is just catching up with us?
I think it's both. First of all, there has been, I think there's general agreement or some consensus that there has been a lot of regulatory forbearance. Regulatory forbearance meaning that many things were going on, but the regulator always gave them time to resolve the problems that were going on. So that is one. A lot of governance problems. We've seen, especially with small banks and closely held banks, we've seen a lot of the transactions that were done with directors and shareholders, which went sour. So, and this has been going on for some time. It's just that it's come to a head now, but it's something that has been going on. So I think the regulator was caught, totally unprepared, and therefore the resolution has been a bit difficult. Yes.
Doc, what do you think?
Yeah, in fact, I agree with him that it's a combination of both bad behavior by the banks, alongside with, as you said, structural, issues also in the economy. In fact, the bad behavior is mentioned them, weak credit management, weak corporate governance, and then in some banks, if you look at their balance, you see that their administrative costs internally are very high. So that's internally, these are some of the problems peculiar to some banks. But if you look at the economy as a whole, some of the factors that I would say are external to the banks, as he mentioned, oversight, supervision has not been the best. Then we also have this problem of what I call proxy government debts. In other words, contractors who have done work for government have not been paid. They go to the bank. and take money. And eventually it becomes a non-performing, loan. I don't think you can blame that on the bank. Okay. And then in general, the banks complain about high cost of funds when they go out to source, funds to operate with. There's a high cost of even public services, utilities, energy, and so on. I think some of these are external to the banks. And then even macroeconomic instability in the economy, high inflation, exchange rate instability, come at a cost to banks. Now, the reserve requirement that we mentioned, 10%, that you thought may not be high enough. In other economies, is low. So that 10% even is a cost to the banks, because when they mobilize 100, they have to lodge 10 with Bank of Ghana, which is unremunerated. So it's a cost to them. Even though they have to pay interest on it to the customer, they lodge it with Bank of Ghana for free. So it's a cost to them. And if things were normal, we should even be able to bring that level down.
Let me read something a colleague of yours wrote, Tony Killick, in his book. He calls it Development Economics in Action, a study of economic policies in Ghana. He says, research into banking efficiency published as far back as 2004 concluded that Ghana's banks behave non-competitively, and despite evidence of low levels of efficiency, made absolutely and comparatively high profits. And then it goes on to talk about other things. In fact, I have some graphs to show you the level of profit Ghanaian banks may compare to their peers, the level of salaries they pay themselves. I mean, is that not also part of this? In terms of the banks having high interest rate spreads, they are not really lending, financial discipline is low. Is that not also part of what we are suffering?
I think the cost of financial intermediation in Ghana is very high, and that is reflected in the spread between or the interest rate spread. The banks are earning very high spreads on the monies that they take as deposits, and because of that, they are actually making a lot of profit. They have made a lot of profits in the past. And so one of the reasons why this is happening is because the banks have been inefficient. So when you reach a point where loans are not being paid back, losses are mounting, then it is increasingly difficult for you to meet your overheads, meet your expenses. And you saw that in the last year or two, bank profits have actually gone.
I'm showing a couple of things on the screen. Return on equity based on underlying profit for the big 6 banks. Amazing numbers for Ghanaian banks. These are the top 6 banks. You will see most of them are earning above 30% return on equity. GCB around 80%. EcoBank over 100%. Fidelity 50%. Stanbic over 100%. I mean, and the other graphs I'll show. Return on assets. If you compare Ghana, Kenya, Nigeria, Sudan, Ivory Coast, Ghana is far ahead of everybody else. Then you have, what do you call it? Net interest margin. Huge. The Ghana banks are fantastically profitable compared to all their peers. What is going on? Why are Ghanaian? Yes, look at that. Return on assets as well. So people who set up banks in Ghana, especially global large banks, Ghana is a very profitable place to do banking business. Yet, private sector say we don't have money from the banks. How come banking is so profitable in Ghana, and yet financial dependence is so low? Private sector doesn't get any loan. What's going on?
I think one of the signals we're getting from here is that the banks are they are not highly capitalized. They are using very little equity, and then running into a lot of leverage, gearing to run the banks. That's why the return on equity is very high, because the denominator is very, very low. So it's a signal that banks are under. One of the reasons why they are so profitable.
So they don't pump as much money in here.
Exactly. With very little equity, you can make a lot of money on that equity. So return on equity, somebody has 80% return on equity is huge.
So I'm showing now underlying profits of the big 6 banks, and if you look at profit after tax, they make provision for bad debt. Still a lot of healthy profit for our big 6: GCB, EcoBank, Fidelity, Stanbic.
Yeah.
It's very profitable. So you're saying if they were to invest a lot more and the capitalization was bigger, they wouldn't make as much profit?
No. They wouldn't, not absolute profits.
Yeah.
I'm talking about return on equity.
Okay. Yeah, because the equity is low, you're saying.
Exactly.
Yeah.
You know, as you quoted Tony
Killick.
I mean, he says Ghanaian banks are not very competitive. But they make all these abnormal...
Huge profits.
Yeah,
yes.
they make these huge profits. You know, if you look at the history of banking in this country, it was like there was a thought that if we had more banks, there will be efficiency. That is why Bank of Ghana, you know, went through this process of licensing. And now these days people say that maybe even too many. Because that so-called efficiency that was to be expected after, I mean, registering so many, but apparently didn't materialize. So it looks like it's still like a highly, as economists, oligopolistic kind of system. You know, in other words, the banks, you know, they copy themselves.
The competition is not real.
No, they sit on these wide, you know, spreads, and that's where they make most of their profit from. You know, they pay minute, you know, rates on deposits,
yes.
And then you look at the lending. The spreads in Ghana, if you look at it, is, I mean, much higher than what.
But is that a question of poor regulation? If banks are not, I mean, there's interest rates are high.
Yes.
They are not lending. Their interest rates don't look that different from each other.
Yes.
Is it poor regulation or anti-competitive behavior? What's going on?
Well, the thing is that we say that we are in a free market kind of system, in liberal, so we don't want to control them, you know. But in other countries, they will tell you that you cannot keep, you know, a bit of control. We don't want to do that here. So we've left the market. But you see, the thing is that sometimes in markets there may be what we call market failure, which will require direct intervention to correct some of them. But here it looks like we don't want to do that. Okay. So these are some of the distortions.
Dr. Mensah, you did a study for International Growth Center where you said that one of the reasons why interest rate spreads are high could be agency conflict, and that you thought that the people who run banks actually benefit from the spreads, as in the MDs and co, and that the shareholders can suffer. But it actually, there's even some moral hazard there. Can you elaborate?
Well, it's what we call the principal and agent problem. The executives who run the banks are in effect agents of the shareholders.
Okay.
They're supposed to be working for the shareholders. But what normally happens is that the shareholders are not as informed about the bank as the executives. So we have what we call asymmetric information. Whenever you have asymmetric information, it can be abused by the agent. So the agent is actually there maximizing his or her personal returns as opposed to maximizing the returns to the shareholders. And so you can, if you look at the remuneration structure of banks, and that's what we did in our study, you will see that bank executives are very highly paid with a lot of perks. Okay, so then in effect the agency problem is interfering with the the profitability or the efficiency of the bank. How do you resolve that problem? I think Bank of Ghana is taking some steps in that direction, for example, by trying to limit the tenure of bank executives. But we can do more. I think that maybe as part, I think it's legitimate regulation for the central bank to specify the types of remuneration packages that are not acceptable. Some of them are based on very high bonus rates. Very high. So I think that these are some of the challenges that the central bank is now trying to deal with. But there's a major agency problem.
We'll take a short break. This is the point of view. When we come back, we'll find out whether the Bank of Ghana's response to all of this has been comprehensive enough. We'll also discuss other challenges our economy is facing. The cedi is taking a pummeling from its major trade partners. The president has admitted that things are hard, but are not yet in a crisis. What's going on? Why are we importing so much? What are the practical things we can do for Dr. Sam Mensah, Dr. John Kwakye. Don't go away.
Ever thought about where you'd really want to live or invest? Is it beautiful, modern, and sustainable? Is the architecture advanced with state-of-the-art facilities? What if I told you you could find it only 15 minutes away from Adenta? When your hard work pays off, you need to invest in the right place. High-quality real estate appreciates in value. But the value is not just your home. It is also the area that surrounds it. Good roads with safe speed limits, drainage for even the most punishing floods, and neighborhood planning that ensures your view will never change. You can also invest in the commercial, social, and mixed business spaces, as well as Apollonia Business Park. It's time to make your move to Apollonia City. Call or visit us today. Our payment plans are tailored for you. Visit www.apollonia.com.gh or call 0275 577 577.
This is the point of view. We're trying to understand what's happening with Ghana's economy in recent times as compared to the bank challenges. So we've brought you a quick report on some institutions that are facing some kind of a run. My guest, Dr. Sam Mensah and Dr. John Kwakye. I'll be reading your comments pretty shortly. In a couple of minutes, has the Bank of Ghana's response been thorough enough? Dr. Kwakye, you used to be on the MPC.
I am still on.
Oh, you still are? Oh,
yeah,
you are still on the MPC?
Yes, I am.
Oh, okay, then I have to change the way I'm questioning you.
Well, but we don't do regulation. I mean, we are not involved. Yeah, we just
set the interest, the rates, and hope things follow through.
Exactly, you know. So, but well, the bank I think has handled the situation reasonably well. You know, especially as I said, to come out and safeguard together with government customer deposits is the strongest intervention that I think they made, because that is what you need to calm the situation. When you are faced with this kind of situation, what you try to avoid is panic, a run on the banks. Then it will be a systemic kind of problem. It will, because the banks are so much interconnected. You know, so when one goes down, you know what happens during the international financial crisis about a decade or so ago. You know, one bank failed, Lehman Brothers, and it ran through the entire financial system. Yeah, so that is what you should try to avoid. And I think in that respect, they handled the situation very well. But of course, it came at a cost to the nation. I mean, the taxpayer, in bailing out the banks. I mean, that's something that we shouldn't forget. I hope that they will go ahead and help the banks to strengthen some of their internal management processes, because corporate governance has come out as a big problem, weak corporate governance. You know, some people have suggested that maybe even Bank of Ghana should conduct some kind of training, you know, for the banks, maybe at the National Banking College or somewhere, you know, instead of leaving the banks to, you know, train themselves. And then I hope that they will come to some kind of resolution about this so-called, proxy government debts. Because some of the banks have complained that it's because they're holding these government debts, unpaid government debts on their books. You know, some of them are backed by certificates. showing that work has been done. You know, I think that they should also do something about it, because it's to help them to improve their assets.
I'm looking at Ghana Club 100 award for 2017. About 60 of the companies are financial institutions. Is that normal?
It's probably more a reflection of the weakness of the other sectors.
60 of the top Club 100, and I have the list. It's online. I was just counting. About 60 of them are either financial or related to money.
There are challenges with the Ghana.
What is the?
Yeah, I know, but like, it's a good measure of whatever, right?
No, but what measure do they use to select them?
Club 100.
Is it profitability?
So let me explain.
Is it the size?
You explain.
Yeah.
See, the way Ghana Club 100 works is that companies, banks voluntarily submit their financials.
Okay.
But banks don't have to do that voluntarily, because they are already required by law
to do it,
to publish their financials.
Okay.
And therefore, their financials are automatically available for the ranking of the Ghana Club 100. But many of the other companies, especially the privately owned, privately held manufacturing company, are very reluctant to put their financials out there. And so the entries are a bit skewed. That's why you see a lot of...
So it's not good, but there's a view that we have too many financial institutions compared to other institutions who are more productive. And I use productive in a sense that financial institutions are good, but we are buying and selling money. We are not creating anything else.
Some have made that argument. And the thing is, there's no clear scientific method for determining whether you have too many or too few financial institutions. As you go from country to country, you see all kinds of variations. You know, Kenya has 45 banks, and then how many non-banks? As many as you can think of. So it's not very easy to scientifically say we have too many banks.
Okay.
But I think that you have to continue. The way it has evolved in most countries is that regulators face challenges. The market presents challenges, and it causes the system, the regulatory environment to change. The regulator might come in with new requirements that will restrict entry into certain sectors of the financial sector, and therefore the regulatory architecture changes from time to time. And that is how most countries have done. It's been as a question of regular review. Nigeria went from 89 banks to 25. It came as a result of challenges they were facing, and they decided to address those challenges by consolidating their banks. I think Ghana also has challenges. I think there are at least two of them that are driving the thinking that we have too many banks. One is the question of high interest rate spreads, high cost of intermediation. So if you have larger banks, larger and fewer banks, there's economies of scale. And therefore, the unit cost of running a bank is much lower. So that's one argument, strong argument for having larger banks.
So you agree with the increase in minimum capital requirements?
Oh, from where I sit, yes, I think I do. Because for these two reasons that I'm giving you, one is the economies of scale that comes along with larger banks and lowering the unit cost. It should enable the banks to operate at a lower margin, which is good for the market as a whole. The second one really has to do with shoring up their balance sheet so that they can do bigger
ticket items.
Yeah.
But
So
Bernard, you know, strangely, even though you're saying that we seem to have too many financial institutions, when you measure financial deepening in this country, by whatever measure,
yes,
you will see that it's still very shallow compared to, you know, countries of our status. I mean, middle-income countries. So we have this financial, but financial intermediation and financial debt is still.
But that's why he's saying that if you have a bigger, efficient bank,
well,
so the fact that you have a lot of financial institutions doesn't mean that they're actually doing the work.
Intermediation. Yeah,
Okay.
that's a fact. Yeah. So you could bring in efficiency and more intermediation even by creating bigger banks. Yeah.
Let me read something to you. You wrote an article in 2012, Dr. Kwakye. It's titled, "The Recent Slide in the Cedi Should Be a Wake-Up Call." You examined the reasons for the recent sharp depreciation in the cedi, and you placed it in long-term context. You offered a short-term and long-term solutions to safeguard the cedi's value. You argued that the only way to stem the cedi's continual weakness was to strengthen the fundamentals of the Ghanaian economy, particularly by fortifying the export and industrial base and the fiscal position. This is 2012.
Yeah.
6 years ago.
And
we are still suffering cedis.
And I want to say that those prescriptions,
they didn't listen.
I'll offer the same prescriptions now.
You won't change the medicine?
Nah. It's the same.
Same thing.
It's the same thing. Because the structure of this economy, as I was advocating for, has not changed. The economic structure that we have, over dependence on primary commodity exports, and also over dependence on the other side on imports. You know, in the 1960s and 70s, Ghana was a much more industrialized country. You know, we were producing virtually everything. I'm not arguing that maybe that was a good model or not. But now our industrial base is so shallow, and we are so much over dependence on imports, and then we don't also add enough value to our exports. You know, so that is the crux of the matter.
So same thing.
You see, until we address that fundamental problem of economic transformation, all that we'll be able to do is that Bank of Ghana can only manage the exchange rate. You know, step in from time to time to intervene to hold it, but then it will, when they don't have enough reserves, they will have to let it go. You know, when we did redenomination, just 2007 or thereabouts, we created this new Ghana cedi that was even higher in value than the dollar. Okay, but where are we now? We are almost 5 to 1, and I'm saying that trend will continue. Exactly.
You agree?
Yeah.
I do agree. I think that if you look at the structure of our exports, okay, most of what we export, about 85% of it is primary, natural resource-based exports. The other category, which is supposed to be maybe manufacturing or non-traditional exports, is actually shrinking. Oil has actually made the other category of exports shrink in size relative to the whole. So yes, as long as we have this kind of structure, the fundamentals signal that the cedi will continue to depreciate. From time to time, you will have market hiccups, and so in a short window of time, you have sudden gyrations in the value of the cedi. But the fundamental direction. So
you are saying it's a structural problem.
It's a structural problem, and when we have to work at reversing or transforming the structure of the economy in order to resolve that fundamental structural problem.
By exporting more, spending less on imports?
Not just exporting more, but also get more favorable terms of trade. You get more favorable terms of trade if your exports have value.
Let me read a few comments for you. Prince Hoto says, greetings to your panelists. BOG wrote off 1.2 billion cedis of NPLs in banks. That money could have buffered the system, but this action comes with good reason. BOG must tell us the nature of these NPLs. Same script, different cast. Hello, Ben. I commend the governor for ring-fencing the depositors' funds in the banking debacle. But further on, I don't think the issues have been handled well. To me, I think after the ring-fencing, institutions should be allowed to operate with the culprits pulled and prosecuted. Team Mensah, my regards to Dr. Kwakye and Dr. Mensah. They both taught me.
Oh, wow.
Justice Ofe says,
yeah.
Hi, Ben. When America was hit with financial crisis, certain reforms were informed by their central bank, and none of them that brought confidence in their sector was the Deposit Insurance Act. Why can't we enforce ours? Bank failures happen often and yearly in developed nations, but proper procedures have been laid by these central banks to receive these failed banks without creating panic withdrawals. Over 5 banks have failed in the US this year. Ghana. Let's talk about our economy's stability. So the president admitted that things were difficult. Yet he seems to say that they've stabilized the economy, inflation has come down, growth is supposed to pick up. What's your sense of the economy? Why are people complaining when the government sings? Dr. Kwakye, what's going on?
Well, of course, this government took power at a time, every time after our elections. I mean, the way we raised the level of expenditure and then the deficit during elections, the government that comes in must necessarily have to consolidate the economy, stabilize. You cannot go on the same path as you did at election time. Yeah, because your deficit is unsustainable, you have run up debt, that's all. So you necessarily have to stabilize the economy. So that is always a priority for government. That's what the government has been trying to do, to consolidate. And that's why they have targeted, lower fiscal deficits and so on. Necessarily, when you are consolidating, it means that government is not spending that much. Yeah, they need to raise revenue to meet their expenditure. So naturally, people will even feel that. Of course, when you do that, you are bringing inflation down, trying to stabilize the exchange rate, and so on. These are necessary. The stabilization is necessary for you to then move on to do the things that will enable the economy grow. But you have to stabilize first. And while you are stabilizing, people will feel it that there's not enough money in the system. I mean, because necessarily government should reduce the rate of its spending, the pace of its spending. And that's why there's a need for prioritization of the expenditure. You are not spending enough, but where is it going to? And I think that is where maybe we need to pay more attention to how is government spending whatever monies that they have targeted. Where is it going? But necessarily there will be some kind of liquidity crunch in the economy when you are stabilizing. But then you need time then to be able to move to the next trajectory where you will be injecting more liquidity and more spending into the economy to generate more growth. That is when people are going to feel it a lot in their pockets a lot more.
What do you think? Why is there a difference between what seems to be good on paper,
what is happening on the ground?
And yet people are complaining?
Well, I think Dr. Kwakye has elegantly explained that. But basically, what I can add is that we need to stabilize for a long enough period in order for it to start making a difference.
Okay.
So what this country has been through is that every 3 years, 4 years, there's an election. And then after the election, we concentrate on stabilizing. Just when we're stabilizing, there's another election, and then there is it throws off the stabilization, and then we have to start all over again. So some of the policies that are being contemplated now will help us have longer periods or longer bouts of stabilization. For example, there's the fiscal rules or fiscal stabilization rules that are being talked about. What those rules do is that they constrain the government by law, to stay within a certain budget framework. And that will happen whether there's election or not. And so that gives us the consistency. And unless you have a stable economy over a consistent period of time, a long enough period of time, it is very difficult for the benefits to spread to the population at large.
We'll take a short break. When we come back, we'll read more of your comments and wrap up with my guests who are trying to deconstruct our economy and the financial sector. Don't go away.
Ever thought about where you'd really want to live or invest? Is it beautiful, modern, and sustainable? Is the architecture advanced with state-of-the-art facilities? What if I told you you could find it only 15 minutes away from Adenta? When your hard work pays off, you need to invest in the right place. High quality real estate appreciates in value. But the value is not just your home. It is also the area that surrounds it. Good roads with safe speed limits, drainage for even the most punishing floods, and neighborhood planning that ensures your view will never change. You can also invest in the commercial, social, and mixed business spaces, as well as Apollonia Business Park. It's time to make your move to Apollonia City. Call or visit us today. Our payment plans are tailored for you. Visit www.apollonia.com.gh or call 0275 577 577.
We spice up your mornings with culturally enriched conversations, social interviews, and policy-oriented discussions that will keep you updated on the progress of the nation.
Because we're giving only those in their third trimester. So in the next 3 months, those in their second would be ready to receive the kits. And we're taking data at registration, which is before they take the kits, at delivery and post-delivery, so that we can analyze and we'll see the number from the data we're collecting. We would know what has worked, what hasn't worked,
Join the Breakfast Daily team Monday through Fridays from 7:30 a.m. to 10. Let your voice be heard with the hashtag Breakfast Daily. Join us for breakfast daily, only on City TV.
Welcome back. Here are some of your comments. Ney says, Bernard, bank consolidation is a trade-off between economies of scale and too big to fail. Can your two doctors comment? Another one from Inkum Ochre. Bernard, the argument has been that there are too many banks, but some counter that argument that if that is not the case because other countries have many more banks, like Malaysia. However, I think the challenge has to do with the number of depositors that these financial institutions compete for are few, and the competition is not even spread in the entire country, but only in the cities, in addition to the challenges that mobile money brings. More comments. Good evening. You have assembled fine brains to dissect the issues. Kudos. The challenges are real, but has been mishandled, causing panic withdrawals to make the situation worse. This has led to several job losses, which has its own implications. Yesterday, about 1.2 billion of loans were to be provisioned. Good move, but will also leave banks shaken, as this will affect their reserve earmark to cushion banks to meet the new minimum requirement. It's a rather longish one that you sent in. But I think the government should take its time in cracking the whip on banks in this country. If we don't take care, all local banks could collapse as a result of panic withdrawals. MPP should not forget what DKM did to NDC in Brong Ahafo. Ahmed Salim Bongo Madina. Bernard, please explain this to me. If Bank of Ghana is writing 1.2 billion off its books as bad debts or non-performing loans, does that mean they are not going to retrieve the monies taken from them by banks who went to mismanage the funds, and we are not going to see them, we are not going to see any justice for the bank managers who did the mismanagement? So this is Fifi commenting about the 1.2 billion provision. Bernard, I'm worried about the several demonstrators who have besieged the savings and loans offices demanding their monies and asking government to come to their aid. My question is, with whose money? If you sample 10 people, I can safely say 9 of them are non-tax paying persons. This is an opportunity for IRS to rope them into the tax net. You are wicked pound. People can't get money if you collect tax from them again. Let me end on a funny note. Nee from Bachona says, Bernard, good evening to you and your guest. Your guest in the middle is wearing the haircut back in the day we referred to as Tokyo Joe. This has been his trademark haircut. And then, Bernard, good evening. Great discussion. And to the minimum capitalization raised by the BOG, it was so easy to start. It was so easy, the banks to start with meager capital and make huge turnover. The BOG is doing the right thing, and we should encourage it. I love the haircut of your discussant. It might trend soon. Kweku in Dansoman, the two fundamental problems is the low deposit rate and the high lending rates. Low deposit rate creates the temptation for people to go for higher returns, hence their funds being locked up. On the other hand, how on earth can you make a decent return with an interest of 30 to 35% of your capital? I believe the lending rates are high to accommodate for the risk. So I guess this is the risk associated with it. The spread of the banks are too high. Government needs to check that. A lot of comments. Government, Bernard, I think we should avoid trading in foreign currency on the black market. the government should insist on CD for trade in Yao and Kasua. And then somebody ends by asking, how can you have a strong economy when you import everything? Also, we need to cut our quota according to our size. Enough of the land cruisers. Let's use our money wisely. Any of the comments jumping at you? Somebody said big banks and economies of scale versus too big to fail.
I think it's a fair comment. I mean, you get economies of scale by having large banks, but when you get large banks, they are also too big to fail.
So we have to save them when they misbehave.
So it's a trade-off. I think it's an excellent comment.
What about the questions around the 1.2 billion provision for bad debt? People don't seem to get what that means. The Bank of Ghana announced 3 days ago that the bank should write off 1.2 billion cedis of non-performing loans as bad debt. People don't understand whether that means that the banks will take money out of their profit to pay for that, or whether the Bank of Ghana is going to use its own money to pay for that.
Sorry, go ahead.
If they're asking the banks to do that, then that's exactly...
So the banks will cater for this?
Yes. This is not extra
it's not government money.
Injected from the Bank of Ghana.
So it will just affect their profitability.
Because they put money in reserve provisions, and they should use part of it to write it off. I think that's what.
So that's what it is.
It means you charge it against your profit and loss statement.
Yes.
And you go into a loss.
If you don't have enough.
If you don't have enough.
Provisions.
We are told 19 of the banks can meet the minimum capital requirements. Is there an optimum number of banks you think we need in this country?
As I was saying earlier, I don't think there's a scientific way of determining the optimal number of banks in the country, but I certainly think that at this current juncture in our economic development and financial development, we could do with about 12 banks.
12?
Oh, you go down as far as 12?
Yeah.
No, I would say about 20.
Right now, we are close to 40. We have 35 or so.
Oh, no, we used to have about 30.
We have about, if you take the 7 out, it's about 30.
It's now come down.
Does it matter if the local banks are fewer? Because they are not deep. Does it matter if our banking sector is dominated by foreign capital?
Well, not really.
We need to take, in every sector of this economy, if possible, we should take commanding highs in every sector of the economy as Ghanaians, if that is possible, if we have the expertise and the capital. So if our banking sector is dominated by foreign banks, I don't think it's the best.
But you don't think?
Well, by the way, you know, you don't have to have a large number of banks to have an efficient banking system. Canada has 5 big banks.
Okay.
Wow.
5. And they are in every corner of Canada. They operate on an interest rate spread of about 1%.
Wow.
Some of them have gone ahead and become major international banks. So the number, you can be quite efficient with a small number of banks.
Let me end with 2 comments. Bernard, what is happening in the banking sector is the same with the non-banking sector. William from Spintex. And then K from T says all the lead indicators are pointing to a recession. When do we know we are at a crisis level? Do you agree?
I think the first point was about what is going on in the banks is a reflection of
what's happening. You agree with that?
Oh, certainly. The real sector, what is happening in the real sector also, I mean, because the two are linked. The financial sector and the real sector.
So the financial sector is a reflection of the real sector?
In many ways.
Wow.
And then
vice versa.
And then vice versa.
Are we getting into a recession? This is what somebody's saying.
Recession.
Is that all the indicators are pointing to a recession?
I don't see such indicators.
Oh, everything?
No.
You don't agree?
Recession means that you must see 2 successive quarters of negative economic growth.
So we are not there.
We are not there.
We are not there. Fantastic.
We are still seeing positive growth.
I've been speaking to 2 of the best economic minds I know. Dr. John Kwakye. I call him a senior economist. He's a senior economist, and he's on the Monetary Policy Committee. Dr. Sam Mensah is a financial economist, one of the architects of our capital markets, if you want. Thank you, gentlemen, for being on the program. My name is Bernard Avle. Please keep watching CTTV. Good night.
The Point of View is sponsored by